Hello, myself Safa and welcome to your 5-minute recap of Delta's global economic news, your comprehensive source for latest updates and insights. Currency downturn. Australians brace for higher costs on foreign gateways and fuel as Aussie dollar weakens. Nikkei share average records largest weekly loss in 8 months amid concerns over China's economic outlook and apprehensions about rising yields. The FTSE 100 index narrowly avoided its lowest close of the year after a grim week for global stock market. The US stock market is at risk due to lower cash liquidity and decreased bearish sentiment, potentially increasing market volatility and sensitivity to negative news amid concerns about resilience in the face of downturns. A weaker Australian dollar means that it takes more Australian currency to buy the same amount of foreign currency, making overseas expenses like accommodation and meals more costly for Australians traveling abroad. Additionally, since Australia imports a significant portion of its oil and petrol prices are tied to global oil market priced in USD, a weaker Aussie dollar increases the cost of importing oil and tends to lead higher petrol prices domestically, impacting transportation costs and potentially raising the overall cost of living. The stock market in Japan, called the Nikkei, it had a bad week where it lost a lot of value, which is the biggest drop in 8 months. The reason for this drop is because people are worried about China's economy, meaning they are concerned that China's economy might not do well. This worry is affecting not only the Nikkei but also other stock markets. People are also concerned about something called yields going up. Yields are like the profits that people get from investing in certain things. If they go up too fast, it can make investors nervous, and that's the part of the reason why Nikkei dropped so much. The FTSE 100 index managed to avoid hitting its lowest point of 2023, despite concerns stemming from a 1.2% drop in UK retail sales. The decline in retail sales has raised some alarms, indicating potential economic challenges. However, the FTSE 100 showed resilience, possibly due to a combination of factors such as investors' optimism, global market trends, and government interventions. The situation underscores the complex interplay between economic indicators and market performance in a dynamic and uncertain financial landscape. The US stock market faces potential vulnerability as a result of reduced cash liquidity and a decrease in bearish sentiment. The combination of lower available cash and a decline in bearish positions could create an environment where market participants have fewer resources to withstand potential downturns and fluctuations. This situation highlights the delicate balance between market sentiment, liquidity, and the overall health of stock market, raising concerns about the potential for increased market volatility and a heightened sensitivity to any negative news or events. Now, Mr. John will be joining us to provide insights to Nasdaq technical analysis. Make sure to stay tuned for more details as they unfold. So, this is Safa signing off for now. Remember to stay connected with us for latest updates.
Welcome back everyone to the weekly Nasdaq analysis. Joining with you, Mr. John from Delta International Headquarters, Dubai. The three major indexes on Wall Street closed mixed on Friday, aimed growing concerns that a resilient US economy will keep interest rates higher for longer and eventually will cut into corporate profits as growth slows. Stronger growth has increased the likelihood that the Fed will hold interest rates higher for longer as policymakers focus on bringing inflation down closer to their 2% annual target. The yield on 10-year notes fell 5.5 base points to a 4.253% after reaching 4.328% on Thursday. Coming back to the technicals, we can clearly see that the Nasdaq is currently on a downtrend. The Nasdaq fell till the point of 14547.6 and again on Friday had a raise till the point of 14764. Let's expect the Nasdaq to fall again in the next coming week. Stay tuned to know more.